buy a double diagonal, double calendar, and we're going to change the puts. Instead of the 42.5 calls, or I'm sorry, we're going to keep the 42.5 calls, but let's change the puts to the 40 puts. And then go ahead and analyze duplicate trade here. Okay, that doesn't look too bad actually. We've got our actual live price is just below the center of this. So let's see if we can't play a little bit more with the strike prices. What if we go to the next lower, we'll go to the next lower calls, which is the 40 calls. And let's go down to the next lower puts, which is the 37.5 puts. Now we're a little bit too far over to the right, so we can't seem to get this exactly in the center. Let's do this. Let's close that out, go back to our trade tab. Let's see if we can't. We're trading right at 40 now. Let's see if we can't get a calendar at least at the 40 strike price. That doesn't look too bad at all. So what we've got here is a calendar. The symbol is ADSK. We are looking at the June 40 calls. We are right-clicking on those. We are going to buy a calendar at the 40 strike price. We are analyzing it as a duplicate trade. And you know what? It doesn't look too bad. Now all you have to do is determine exactly how many contracts you want to do, and in addition, you want to take a look at your break-even points here. We want to try to get in the center as much as possible. I believe, based on the current state of the market, I think we're going to drop down a little bit in the market. This stock may follow, it may not, but our break-evens on this are these red lines here, and it looks like we've got a break-even on the left side of 38, and we've got a break-even a little bit higher than 42 on the right. And if we go back to our profit charts again for a second, 38 is down here where prior support was for this group of trading days in here, and 42, a little bit higher than 42, maybe 42.25 on the upside is our break even, and that is right around where the current resistance of this 200-day moving average is. So this looks like a very, very good trade. Now all you have to determine is how many contracts you actually want to do. Let's go back to the Analyze tab. I'm just going to bump this up a little bit to 5 contracts. Our maximum profit on this is going to be approximately $400 at expiration of the June contracts. And we're going to add this to our portfolio. It looks like we've got a nice range to move in. We've got a peak profit here. Now, we may have to adjust this later, which will give us an opportunity for even additional more profits, for more profits. However, at this time, you know, let's put on this, get this started at least as a trade in our portfolio, and let's start collecting some theta here. So our debit is 65 cents, as you can see, and that's the most that we can lose in this trade. When you're doing a calendar spread like this, whatever your debit is your maximum loss. So you can't lose any more than 65 cents in this trade. The margin requirement over here for this trade, even with 5 contracts, is only $325. And it gives us an opportunity to really diversify our portfolio a little bit. Let's go back to the Analyze tab, keep this on, go from single symbol to portfolio beta weighted, and see what it does to our portfolio. Let's take it off and put it on. Take it off and put it on. It doesn't move our price exactly, but it does give us a little additional profit potential in our green line up here. Let's take a look at that. From here, which is $2,197 in our demo account, to 2,484. So it gives us a little additional profit potential. It does diversify us a little bit. So we're going to go ahead and put that trade on. We're going to try at the mid price, which is currently 70 cents. It just bumped up 5 cents on us while I was talking. We want to try to pay as little as possible for our debit spreads. But I think this is a good one to put on. So we're going to go ahead and add this to our portfolio. All we have to do is hit confirm and send. And just take a look and make sure everything's right. We're selling the June 40 calls, and we're buying the July 08 calls, both at the 40 strike price on a 5 by 5 calendar spread. And there's our cost is $350 plus $15 in commissions, and our margin is approximately $350. We're just going to go ahead and hit that and send it. It's working, and we got filled immediately. So we are now in that trade, and it looks like we're going to be in good shape here. We're going to follow that trade along with our portfolio, of course, and analyze it as not only as part of our portfolio, but we're going to manage that trade individually if it happens to be working against us and make adjustments as necessary. Okay, guys, that's it for today.